I love talking to my clients. So, with me today is the finance expert, FX, currency trader, and also cryptocurrency, I may add, Patrick Reed from the Adamus Principle.
Hi, Kerry. How are you?
Very well, thank you. Very well. I
Time
love
flies when you're having fun.
Sorry?
Time flies when you're having fun. I can't believe what the months have just whizzed by.
Absolutely, yeah, because we've been working together 10 months now, just 10 months. And
Yeah.
you've had some phenomenal success. I just want to comment on our matching blue. It's really good for this video. I love it. So, yeah, we started working together. Actually, 11 months we worked together because we met in March
That's
in
right.
2021. And you had been seeing people comment on the news, some traders, finance experts, and you thinking, do you know what? I can provide comment as well. And obviously, at the time, you had your presenting slot on the investing channel in the USA. And then you came to me because you wanted to get in the press and on TV and on radio more. So, how has the last year been for you then? How has it transformed your life?
Totally. It's been phenomenal. I mean, it completely changed my life. Completely, a complete game changer. And to be honest, it's given me a huge knowledge and insight of how it works, and what I need to do to get there. You know, it was always, I'm pretty confident in my expertise fit in my field, but how do I connect with that, or that industry to be an expert? And that's one of many things you've given me.
Yeah, because we did one-to-one media training as well. It's not necessarily, I do the media training, guys, not to necessarily avoid tricky questions. It's more to help with their intonation, the expert's intonation, setting up the shot nicely. Because we've all seen really bad Zoom video calls, the way some experts have set up the shot, right? So it's more that sort of thing that I train people in, and how it all works. So you had that. You've been on the program as well. Just run through like some of the results that you've got to date.
Right. Well, I'll have to. You've got a long time. Yeah. I mean, look, they've been great, from ITV News, the Telegraph, a couple of pieces for the Mirror, the Express. I've been on BBC. On also radio. And the great thing about it is it's three things. It's TV, it's print, and it's radio. And this is absolutely fantastic, and what I found is, when you do something, you tend to get another call in a few weeks after, because you're with the amazing media training and your guidance. What I found is that I'm comfortable and confident within my subject, but that doesn't necessarily translate to the digestible bite size that chunks that journalists love and the audience can understand. And that's sort of where you come in. Your guidance over the year has just got these incredible results, and I'm sure it really has. There's no way I would have been able to do the same without it.
And tell me, like, compared to, say, March, April, May last year when you first started calling journalists, the feeling of it then compared to now talking to journalists, how has that changed?
Completely. It's like chalk and cheese. I was really scared in the beginning because I was like, I've got to call these journalists and try and punt myself. And now it's complete, and they're calling me. It's like they're getting in contact with me. I do have that confidence, knowing that, without being arrogant, of course, but just feeling that sense of reassurance and confidence that I can deliver what's required within my vertical within my industry that is really not just credible, because that's what I believe, but it's actually usable for a journalist. So, another thing you sort of steered me on your course was putting myself in their shoes, the do's and don'ts, avoiding the clangers, the mistakes, and being more attractive as a potential guest, being available, and just, having that as well. Because what I found is, I did that small little show in the US, but I was thinking, yeah, I've got this cracked. No, I mean, I was just very much a lot I've learned from that. So yeah, it's fantastic.
Yeah, so people initially are scared of definitely calling the TV media. So that's why I'm on hand to guide people through it so that they can get through that, being scared, because I train them exactly how to talk to the journalists so that the journalist is more welcoming to that person calling up, right? Because a lot of people call with no training and it really annoys journalists. I mean, I'm a journalist as well, right? So I know how they feel when they get these calls from people who have no clue what they're doing, and they haven't even seen them show. Anyway, yeah, I think you got a little bit more than in the Mirror. Wasn't it a full page column or something in your Mirror articles? It's like a full page spread, and you wrote it. So, I mean, that is most clients' dreams to get that sort of level. And I think what the media like about you, and you're on BBC Radio London yesterday. I think that was talking about your CV. Was it the CV thing?
No, that was another thing.
Was that the interest rate
on the
yesterday?
breakfast show.
Okay.
And I got, as a result of that, I got another call to be on talking about interest rate hikes in the Bank of England. So that was a great thing. That was two things in 1 week. That was this week. So.
Okay, right, yeah. So Patrick is a bit more, is avant-garde the right word? A bit more controversial. So the journalists love that. So for instance, one of your consultants, his first language is in English. So there's loads of spelling mistakes on his CV, and Patrick put out there as like the headline that he didn't care about spelling mistakes on CVs. So that's the sort of thing journalists like, because most people don't say that. And of course, I just want to say though, so I'm buying a property in London in a few months, and we talked about interest rates last year, didn't we?
We did, yeah.
You were like, oh, I think that's definitely going to be going up, and you said roughly when. Then you said roughly, I think you said 1 or 2 interest rate hikes by the end of the year. And then one happened at the end of the year, and we said that we had that convo almost a year ago.
Yeah.
And obviously then it went up again yesterday, and then so you were on air talking about the interest rate, which is really good because normally they get economists on. So you're a finance expert, you do FX trading and cryptocurrency, but normally they get economists on talking about that. So that's really good that you got on. But clearly nobody really knows when they're going to be putting interest rates up. But because of your experience for years studying it, you've got an idea. And we talked about inflation as well a year ago. And again, we're seeing probably 7.52% they announced yesterday it's going to be. I mean, it's massive. At the moment, I think it's about 5, isn't it?
Yeah.
But they said at a certain point at the end of the year it's going to be nearly 8%. And then you're also predicting more interest rates later this year, aren't you? Rises. Tell us a bit about that.
Yeah, no problem. I mean, it was great to provide a bit of colour and context. Now, as an expert, I look at what is fondly known as SONIA. Now, SONIA is the interest rate derivatives market for the UK. Bit of a mouthful, but I look at that, and basically the market buys and sells things, and that is the price basically, and it's very rarely wrong. So I'm across all of that, and the Bank of England did come out very bold, talking, and their votes as well were very much pro, not just 0.25%, but 0.5%. So I kind of said that in the BBC London Radio interview. And yeah, I mean, towards the end of this year, it's probably going to be 1.25%. That's the current pricing.
Did it say that on Sonia, or is that your prediction?
No, that's on Sonia.
Right. Okay. Yeah. So I need to get my interest rate really locked in, probably. I mean, do you think, what kind of interest rate, really putting you on the spot now? I'm now the journalist again interviewing you.
Yeah, why not?
Yeah. What kind of interest rate rises do you think we're going to be seeing over the next few years, and when is it going to stop? Yeah, I'd like to know that.
I think there's a lot to play. Gas prices are really, really significant. If they continue to go higher, it's going to be bad news. One thing I will say is certainly what I said on the BBC London interview, is the central banks have to come in strong and to be seen to do something. So that's why they came in. I made a very bold statement that buys them insurance. So if inflation is now 5.4, if it goes to 7, the government's going to ask to bring in, for a select committee, is going to bring in Andrew Bailey and go, look, what are you doing about it? What did you do about that? He's going to go, well, actually, I raise interest rates, and it's going to keep his job. Basically, that's how it works. So to answer your question, I feel there will be a pause at 1% and then another pause at 2%. If it goes higher than 2%, it's going to be pretty much carnage for markets, certainly in the property market.
You mean like you think it won't, what, like maybe 2% by what year though?
In 2 years, I would say.
In 2 years?
Yeah. I would say 1% by the end of this year and 2% by the end of next year.
Yeah. So
I don't see it going
somebody
higher.
was to try and get, you don't think it'll be higher? So if somebody was to try and get the best mortgage rate, if the Bank of England raised 2%, what would the minimum mortgage rate be? Do you know?
I'm not sure. I'd have to look into that, Kerry. But I know it will be, I mean, usually it trickles. Mortgage rates are pegged to the 30-year gilt yield, not gilt, so 30-year bond yield in the UK. Gilt is the 10-year. And when they raise interest rates, which is basically the shortest duration, that has a ripple effect on the curve later on. So I would say probably, because we are, let's face it, the party and the punch bowl has been on the table for too long. We need to be normal, and we're not, right? We've been in this artificial la-la land, if you will, and that needs to get real, right? So I would just say, in real terms, for mortgage holders, for borrowers, you'll probably get that crunch around 1%, 2%, then you'll probably see an uplift. But, you know, I always put the analogy in oil prices, it does not equate to petrol pump prices. So the companies like the banks will always go, oh, can we raise our mortgage rates now? Will it be, make us more money? Or is it going to deter people? So they're always thinking about that as well. But yeah, I honestly, because with such low rates, I honestly don't feel you're going to get a massive pinch as a borrower for a big ticket like a house. You're not going to feel a pinch until we crack 2%. I think that's the natural ceiling.
And of course, because property in, well, particularly London and even many other parts of the country is so high, an extra percent can be an extra £1,000 a month on people's mortgage, right? Because the mortgage is so big. So we're talking big numbers. But I want to get to the stage where I pay the mortgage off, and then when I get an interest rate rise, I'm like, yes, right? Because then I'm going to make more money on my savings. But that's why I'm trying to think of it like that.
Yeah, and also, and so not to keep mentioning about the interview yesterday on BBC, but
please do. That's what this is about.
The BBC interview I did, again, there were some crumbs for comfort. in the projections, and basically, raising interest rates good actually in a weird way for the property market, because essentially you're going to get inflows to buy sterling, especially from dollar. That means businesses, that means expansion for UK businesses, that means everyone wants to be in Britain, be it savers, be it business owners, because you get more value on your sterling. So slowly but surely it is a healthy thing, not just for the currency but also for property, right? So it is good, it is a good thing, but not too much too soon,
because it keeps the market from rising too much.
Yeah, but it also rises, it also lifts the market in a funny way. It actually reduces leverage. So it reduces the froth, and it attracts some more long-term buyers in, and it also increases the value of everything. So, when you have a higher sterling, everything's more expensive, which is fantastic for the value of a property anyway. Obviously, short-term borrowing and things like this may get hit, but that will then reverse if it's done properly. Essentially, don't forget, we're not 18%, which I think we were at one point in the 70s.
Yeah, but will interest rate rises mean that properties in London are going to get more expensive, or will it mean that less people are going to buy?
Well, there's a bit of an ebb and flow in that, and it's usually in time horizons. Short term, it could mean that borrowers find it more difficult. More new buyers will be hit hard because they just won't get those mortgages because they'll be more expensive. But the people that are on the ladder, maybe year 3 to 5 or year 5 to 7, will certainly see a benefit overall.
Do you think there's any chance? Because I think around 2008 it was, wasn't it 6%, or
it was pretty bad, yeah.
It was high. Do you think we're going to get to that sort of stage in the next 10 years?
No,
I know that's a long way away.
No, I mean, the playbook from the global financial crisis will never happen again. I'm not to say that banks won't be irresponsible, but we won't be in that situation. Just because 2007 it was rampant. It was so easy to get a mortgage around 2006-07, and banks. There's a lot of legislation that has been brought through, the Dodd-Frank, the Volcker rule, and all of these things to protect, people like you and me, and protect banks from not trading their own money. I mean, they can't anymore. They cannot do that. That's why all the prop desks came out of banks and formed places that I worked at. So,
obviously, getting in the media and then putting it out on your own social media to your own audience. And then obviously when somebody likes it, then a new audience sees it, as well as the people who see you and hear you when you're on the news. How has that affected your revenue and your sales the last year of working with me? Multiple
times. I mean, obviously the two things. One, absolute multiple times return on investment, but also it's given strategically and copying your teachings, it's putting us in a great foundation to move on to slightly different ways to deliver that product, and different ways to engage, and all of that wrapped in together. It's been an incredible year.
Because that's really important to me, that it's okay going on TV and it can be a lot of fun and it's exciting, but there's no way people can just spend half a day or a few hours doing a TV interview and preparing for it without making the numbers work for them, because it's, we've got to live in the real world. So what I teach is very much got to be part of a marketing and PR plan at the same time, so that you get a return on your investment, but more than that, you get several returns on your investment, and see sales increase and leads as a result of your increased reputation, going on TV and radio. So Patrick, everybody, he is a trader, but he also teaches traders and consultants how to do FX trading and how to be more profitable, how to be more profitable with cryptocurrency as well. So I've seen on Instagram, there's people, you know, a lot of people now doing their own trading directly because the software out there, there's the apps. So if anybody wants to get trained, I mean, Patrick doesn't just train a regular person like me, who's not a finance expert. He also trains people from JP Morgan, you've trained, and who else? Who are the other ones?
Morgan Stanley, Goldman Sachs.
That's it.
Yeah.
And they've all been more profitable after working with you on your coaching program than they were before they went on.
Yes.
So that's what Patrick does. As you can see, from my opinion, he would be a good teacher because he's not boring. He's not monotone. We don't want any of that.
No.
So that's great, Patrick. Awesome.
Thank you.
It's good to see you today.
Good to see you too, Chloe. Take care.